Hello everyone. This is the trade breakdown of the signal that I shared for free on Twitter, a live trade equaling to around 120 points final take profit. All right, so let me show you how a simple narrative starting with one daily volume imbalance led to a high probability New York AM session short setup. All right, so this is how I executed the trade here. I'm going to explain everything from the higher time frame down to the lower time frame. All right, so we opened the week. Let's hop over to a daily time frame. We'll see this a lot more clear. Turn off all the drawings here. We opened the week here with a gap above Friday's closing price. So this was Friday's close. This was Monday's open. That is not just noise. That's not random. It's the market leaving behind a very important clue on what's going to happen next. I don't treat these gaps as voids. I treat them as magnets. So new week opening gaps are treated as magnets. When price gaps up, I want to know who's trapped and who is exposed. We opened inside a daily volume imbalance. So this is a daily volume imbalance, and that's where price opened with the Monday candle. Inside this daily, well, first off, before we continue, this daily volume imbalance can also be called an old day opening gap. All right, we'll refer to this as either or. Okay, so this suggests that institutional order flow may want to rebalance price a little bit lower. Why? Because if we pair the new week opening gap that's right below price with the fact that price opened inside of the daily volume imbalance, that gives us the bearish sentiment. That's why I was not buying in this market. My bias was very, very clear. It was bearish. All right, so let's hop onto the 4-hour time frame right now. So on the 4-hour time frame, we'll see a few things here, specifically a 4-hour CRT that I'm going to talk about a little later on. The daily story now needs precision. So that's when we zoom into a 4-hour time frame. And that's where you can potentially find confluences that are going to lead towards the daily setup, either in the London session or New York session. Today just so happened to be the New York AM session. All right, so the daily old day opening gap, the daily volume imbalance, aligns with a 4-hour fair value gap right over here, a 4-hour fair value gap with its midpoint that was respected already. So we're going to take away and remove the daily volume imbalance, and we're going to refine that key level on a 4-hour time frame to this fair value gap. That's going to be the key level. All right. The first 4-hour candle of Monday's daily candle, the first 4-hour candle at 18 o'clock, at 6 o'clock. This candle started to expand to the downside relatively quickly, around 300-ish points, starting to fill the new week opening gap. And then price started to compress and consolidate, forming what? Forming inside bars within. So these 1, 2 are inside bars within this larger time frame range. And then what do you notice up here? We take out that range high. The compression that took place right here within the 22 o'clock and 2 a.m. candle is very important, and it matters. It means buildup. It means the market's loading a bullet. The only question is, when will it fire? Likely during the key times, New York AM session, 9 a.m. or 10 a.m. At 18 o'clock, the 4-hour candlestick closed. I marked the high and low, or sorry, not at 18, but at the end of the 18 o'clock 4-hour candle, when it closed, I drew the high and the low of this specific candle. We have those highs and we have the low. TP2 was the low, final TP. These would become my CRT levels. Price was basically showing me where it wanted to go. We have a key level above us, and we have the 4-hour high. I wanted price to come up into that 4-hour high, as my higher time frame bias was bearish, and then continue on lower. Dropping down to a 1-hour time frame. It's basically what allowed me to understand the thesis behind this entire trade and actually execute. It was the trigger. At exactly 9 a.m., price ran the 8 a.m. highs. This is the 9 a.m. candle. This is the 8 a.m. candle. The 9 a.m. candle ran through the 8 a.m. highs. Then it turtle souped the 4-hour CRT high, all while tapping inside of the daily volume imbalance and the 4-hour fair value gap being used as the key level. That was your classic manipulate, mitigate, and dump style setup. The rejection from that zone gave birth to a new 1-hour order block. And which block was that? Well, that was this order block right over here. As soon as the 9 a.m. candle closed below the 8 a.m. candle, the 8 a.m. thick up close candle became an order block. You can see price then later on retraced into that order block and then started to expand lower once again. This one candle became a weapon to be used to drive prices lower later on. So this is the 1-hour order block in this example here. Now if we hop down onto a 1-minute time frame, let's take a look. The 1-minute time frame is usually a time frame where traders will drown inside the noise. But this is exactly where the sniper finds his perfect shot. The original entry came after a 5-minute CRT while tapping into the 4-hour CRT high and forming a 1-minute bearish order block. That was almost a textbook entry. It would have been textbook if there was a 15-minute CRT as well, which there wasn't, and the reason why I didn't enter short. Up here, missed entry, missing confirmation, that's fine. There's always going to be another entry most of the time. The story was not over. Price displaced below the 9 a.m. open. And if you don't know anything about the opening theory, go watch my latest YouTube lecture. In that lecture, I explain everything about the opening level theory. Price displaced below the 8 a.m. open. 9 a.m. open. This is the 9 a.m. open. Price displaced that 9 a.m. open by creating this fair value gap. The first presented fair value gap after 9:30's opening price. We then created a second consecutive fair value gap. I wanted to tap into So I wanted to see price tap into the second fair value gap above us. We did not get that. We only got the first fair value gap tap in there and then continuation lower. So I did not catch the second potential entry. Why? I wanted the higher fair value gap. That's all. Failed to get that trade off. We waited and waited and waited like a sniper does. Still no entry from that point on. So at 10 a.m. I was still not entered in a short there and still didn't signal out anything. At this point, most traders would get emotional and they would start chasing. But I'm clearly waiting for something a lot cleaner and more instant. All right. The 10 a.m. 1 hour candle opened and retraced to the upside, expanding to the upside with little to no price action below the 10 a.m. open. So if you look at this price action down here, price opens and has one little wick below that open. What I want to see to confirm the bearish thesis is a retracement to the upside like we're seeing here, and then expansion displacing this low. Not low, but the opening level. If price was going to do that here, the entry would have formed here. However, it took a little bit longer than that. Price retraced further on, targeting this 15-minute high, and that would have formed the 15-minute CRT, targeting the 15-minute CRT low. All right, so we take out that CRT high up here, forming an OTE retracement. If we take out the Fibonacci here and we go high to low, let's take out the OTE. You notice we fall right into that 0.705 to 0.79 region and then completely reverse to the downside. On a 15-minute time frame, we have a 15-minute CRT here, and the OTE formed while retracing into the first presented fair value gap into the OTE, which is a premium, and you want to be selling short in a premium, and we were respecting the 1 hour order block and 15-minute order block to go short. So now the real move is going to happen when price displaces this open. As you guys can see, price action during the 10 a.m. hour was simply bouncing off of the open, bouncing, no displacement, no entry. Finally coming back down, 11 a.m. candle opens. We want to see little to no price action above the 11 a.m. open. We immediately respect the first bearish PD array above price with quick expansion to the downside. That's our hint from the market makers that prices are meant to keep heading lower towards the final drawn liquidity in my books. And this is where the real move is going to happen. Right after that expansion lower from the 11 a.m. open, we had a textbook 2 minutes, 3 minutes, and 4 minute displacement over the previous hours, 10 a.m. hours opening level. Displacement was on a 2 minute right over here with a fair value gap being formed. On a 3 minute as well. And on the 4 minute. 4 minute fair value gap as well. Entry using the 2 minute fair value gap to go short. You can see the entry right at the fair value gap level right over here. Hopping down to the 1 minute time frame. We waited for the retracement after displacing the 10 a.m. open. Retrace, stop loss where? Right at that order block's high. We're going to be using the body of that order block in this scenario. So we had one bearish PD array, all of which were overlapping with higher time frames, 2 minute, 3 minute, 4 minute. And then we had a second bearish PD array in the form of an order block with the previous hour's opening level that would act as resistance to keep on pushing prices lower. That's exactly what happened here. And the targets were hit very clean. Asian session lows was original TP1. The previous low of day, the current low of day in that scenario, was TP2. Why? I wanted to see prices tap into the remaining portion of the new week opening gap. You can see prices left this entire region open for price action to target during this morning session here. I ended up scaling a few out at this specific low here, and then the rest at TP2 and then TP3. Now that completes the breakdown. You just watched how I built a full narrative using multi-timeframe analysis and alignment, CRT logic, PD arrays, structure validation, and the opening level theory. If you want to learn more about the opening level theory and haven't heard of it, ICT teaches it. I also have released a lecture on my YouTube channel. This video talks about the opening level theory in depth. Every level inside of this breakdown, every level inside of the trade had context and intention. If you're serious about elevating the way you approach trading, take the notes while going through this video, because this breakdown wasn't just a lucky trade or cherry picking trades. This was called out live on Twitter. It was a process. I'll see you guys soon.